It's getting harder for traders to find some upbeat data point that can drive currency movement. On Thursday, the market sentiment remained negative. Tensions between the US and China is still in the focus of market participants. Despite the fact that the U.S. Department of Energy reported the first decline in crude oil inventories in the country, both crude oil benchmarks dropped in price. Risk appetite is weak due to the ongoing trade conflict between the United States and China. Besides, the OPEC monthly oil report for May made things worse. The organization cut its forecast for oil demand growth this year again. Today, oil has started the day with gains. The nearest Brent crude oil futures contract is trading above $30 per barrel, while the closing price of North Sea crude set in the previous trading session reached $29 per barrel. WTI showed similar dynamics on Thursday. Closer to midday, Texas crude oil futures contract for June was trading at $26.35. Despite the fact that global and local factors pointed to further possible price reductions, we can still see positive dynamics in the energy market. Today, investors are awaiting the release of the International Energy Agency monthly oil market report. Besides, the intraday market sentiment can be affected by the data on unemployment benefits in the United States to be published today. This figure will show the state of the country's labor market. Yesterday, the ruble sank amid weaker risk appetite due to concerns over the global economic recovery and numerous comments about the overbought US stock market. The currency started the current trading day near the level of 74 against the US dollar. By midday, the ruble managed to regain some of its losses suffered on Wednesday, while the greenback fell to 73 rubles 82 kopecks. Thus, the dollar-ruble pair continues to move around the level of 73.60. Later, the pair is likely to make a correction towards the level of 74.05. The tax period starting tomorrow serves as a local support for the Russian currency. However, total tax revenues may be lower than usual due to non-working days in Russia. Today's macroeconomic calendar is bereft of any important releases for the market. Therefore, the coronavirus pandemic will be in the spotlight. The main risk of the second half of day is a possible surge in cases due to quarantine softening and, as a result, a deterioration in the market sentiment in global markets. The World Health Organization has recently stated that COVID-19 could become endemic like HIV. As a result, investors concerned about the risks of a second coronavirus wave have been plunged back into a gloomy mood. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.